Hi, I'm Kerry Artek, Chief Analyst for Wicked Stocks. So you've probably heard by now that we're going to a paid format for our regular series of daily and weekly YouTube videos, including the Daily SPY Report, the Daily QQQ Report, the weekly DIA, IWM, and Bitcoin Report. And so whether you've been watching our videos for the last few days or the last few months, you know that our work is unique and that does provide a distinct sense of market flow and timing. Whether you're a day trader or a longer-term position trader or an investor, you know that we cover all the time frames in all the videos that we do. I've been a market analyst for over 30 years, and I started my own commodity trading advisory off the Chicago Board of Trade in 1996, and I've catered to floor traders, day traders, institutional trading firms like hedge funds and brokerage firms, and large-scale commodity producers throughout the United States. I'm skilled in the art and science of technical analysis, and I know that you're continuing to follow my work on wickedstocks.com will assist you in staying on the right side of the market. We're offering half off your first month. Just go to wickedstocks.com, click on the premium membership link. It'll take you to a landing page that'll have a coupon link. Fill out the word half off, and we'll provide you 50% off your first month subscription. That's $12.50. That's the cost of a movie or a McDonald's meal. And I have to ask you, is that worth the cost in significantly enhancing your personal portfolio's profitability? You can cancel your subscription at any time, but I'm confident that over time, as our work continues to assist you in sharpening your sense of directional market flow and timing, you'll stick around for the long haul. Go to wickedstocks.com and fill out that premium membership form. You won't regret it.
Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily QQQ report for Monday, February 28th, 2022. Before we look at the charts, I just want to remind you, I know if you've already saw the intro, you know that tomorrow we segue into a paid format for the daily QQQ report. The daily QQQ report itself is a $25 a month subscription. You can get half off your first month by going to wickedstocks.com, clicking that premium button, putting in half off. It'll be $12.50 for the month. You can have the SPY or the others, the weekly videos, DIA, IWM, Bitcoin, and all of our stock picks for a total of $50. You could cut that in half for the month. This is the last free daily QQQ report on YouTube. Now, I'm not saying we won't show it on occasion, and we will, but certainly not on a daily basis. And so I really hope that if you find value in the daily QQQ report, if it helps you stay on the right side of the market, if you find it insightful, if you think it sharpens your sense of market flow, directional market flow and timing, then I ask you to become a member. I think the $25 a month on a long-term basis is a reasonable price to ask, but that is, of course, my personal opinion. You have to be the judge of that. I hope you come on board. We will continue posting valuable and relevant content on our Wicked Stocks YouTube channel. We'll be doing Nasdaq-100 index, S&P 500 index, SPX, crude oil, COMEX gold, treasury ETFs. We'll be doing a lot of supplementary stuff, but in terms of the day-to-day analysis for the SPY, the QQQ, the weekly DIA, IWM, Bitcoin, that will be a paid format, and I hope you come on board. Anyway, let's take a look at the QQQ. This is a chart you're probably familiar with. That long-term support at 331.63 was, yes, violated last week on an intra-week basis. Intraday basis on Thursday, we actually settled below it last Wednesday, but inside the 1% zone, which is a requirement for me. 1% is important, both as you approach long-term support and resistance. Once you reach the 1% zone, that becomes sort of bottom-picking territory for long-term support and selling or long liquidation territory for long-term resistance. And inversely, closing below long-term support, you really don't have a valid sell signal unless you close at or below the 1% mark. And we have yet to do that on the QQQ. The SPY itself approached the 1% zone last Thursday. And so everything is kind of holding, despite how sloppy the QQQ was last week in terms of holding. I need to show you some other markets too, related markets. I did this in the Daily SPY as well. The West Texas Intermediate crude oil, while it has been significantly testing its long-term ceiling and spiked above it last week as the QQQ spiked below its long-term support, The crude oil market is yet to settle above this long-term resistance in the 92 handle. 92.83 is the mark this week that if we close above by a 1% margin, we enter another significant buying phase in the crude oil market. But until then, crude can fall back from here and is highly susceptible to falling back into the lower 70s a barrel over the next few months. So that is not inflationary. I think this lends support to the stock market right now. It's very, how should I say, it's very touch and go right now. There's no two ways about it. We're at capitulation points for all of them. But if I'm to read into directional probabilities, it is still up for the Triple Q and down for West Texas Intermediate as we continue through Q2. The same can be said for COMEX Gold. We pushed through a significant price ceiling last week. We did not close above it. In fact, we spiked through it and then closed negative on the week. That in itself is a sign of a heavy market, perhaps, as we continue into Q2. If we were to close above 1927.4, then I think we enter another significant phase of buying for the underlying COMEX Gold market, whereby the next year and a half could reach that 25.85 mark, but not until we close above 1927.4. So once again, we have a classic inflationary sensitive market that is testing long-term resistance and failing to settle above it. I can make the same case with the grain markets. You know, the costs of food, the food index, the wheat market, Chicago Board of Trade wheat, same thing. Push through a long-term resistance level. This is a 10-year channel top that we pushed through last week and failed to close above. And so this is not inflationary as we continue into spring-summer trade with regard to the wheat market. And we can fall off from here in a meaningful way in the broader wheat market. Chicago Board of Trade soybeans, same thing. Soybeans not only affect the cost of our food, but they're also in a lot of our industrial products. So this is an inflationary sensitive market to some extent. 1643 and a quarter. We pushed through it significantly last week, but we did not close above it. So the broader soybean market can fall off from here. I'm not saying it will. Once again, we're at these tipping points, but if there's a case to be made, it's still bullish, the broader stock market, and still potentially bearish, the broader commodity market. So let's jump to the charts. I know this is why you're tuning in. We've got 331.63 long-term support, and above which, having tested it, we should, I'm going to say over the next possibly 2 to 3 weeks, 3 to 5 at the most, 375.56 in reach, that descending channel top. That is our midterm resistance, preceded by a 358.54, which is our near-term resistance. That area is actually in reach this week, 358.54. As I did in the SPY, I'm painting a scenario here that may unfold into the second quarter, into April trade. We could rally into the mid-370s or that 375.56 channel top, back off to long-term support. We could fill that wedge in for the next month or two. If there is one of these two to give way, 331.63 long-term support or 375.56 midterm resistance, it's likelier to be midterm resistance. It's not the stronger of the two, and especially given the fact that we're in a long-term bull market still above 331.63. Closing above 375.56 is certainly possible in the coming weeks, and if so, we should then retest that 408 area high within a matter of a month or 2 or 3 at the most, and even on to new highs before the year is out. And inversely, if we were to close below 331.63 by a 1% margin, we've got longer-term bearish continuation, which I'll get to in a moment. But first, let's kind of zoom in a little bit. I'm going to show you these formations on the daily chart. And we do also have a descending, it's a 3 or 4 week channel top at 339.98 that we did close above on Friday. And I'm calling that now a 2-star support. In other words, can contain selling into later week, and above which we should continue on up to that 358.54 channel top within the week. Preceding that, and we may actually reach this level today, which I'll show in support resistance in just a moment, is the 353.58 channel top. Now, I showed this a lot a few weeks ago. It's still valid, still can contain daily buying pressures, but I really am deferring now really to 358.54 as our objective this week above 339.98. Let's take a look at the support and resistance for today. The green line once again represents roughly where we close. We've got 346.49 just just above the market can contain initial buying, and below which we can fall back to 339.98 within the day, where we can bottom out into later week, as I say, and above which that 358.54 initial channel top is likely within the week. If we break or open today below 339.98, that 331.63 long-term support is potentially in reach. Let's take a look at that. If we break 339.98 today, it's not a stretch of the imagination to see a possible retest of that long-term channel bottom at 331.63, which once again can contain annual selling pressures. Now, if we do close below 331.63 by the 1% margin, 328.31 or lower today, then we enter a significant bearish phase. I'm going to call it a bear market. Right now, this is one nasty correction, but we actually enter what I would call a bear market that should play out over the next 2 to 3, 3 to 5 months. The first initial target in as little as 2 to 3 weeks, 3 to 5 weeks, would be 286.86. That is a 50% downside retracement off that March 20 low against that recent November high. But ultimately, closing below 331.63 by the 1% margin, 328.31 settlement today or lower would, I think, yield 259.08 or that rising 2/3 speed line. And I'm going to say that is a realistic 3 to 5 month downside objective. That is an all-out bear market off that high from last November, and that is an area 259.08 that can contain annual selling pressures. But once again, I'll leave you with this image. That's the last image I'm going to show. I'm actually going to leave you with the support and resistance for today. Once again, holding above 339.98, we should reach that 358.54 level within the week, where we can top out through next week, and if settled above, should then yield that much more meaningful 375.56 midterm resistance area within another full week of trade. Downside, merely breaking, especially opening today below 339.98, will allow that 331.63 long-term support level. That is possible today. A lot going on in the Ukraine over the weekend. Fighting has intensified. There's reports that the Ukrainians are showing stronger resistance than expected, and the U.S. and the European community, or much of the European community, NATO, has taken many prominent Russian financial institutions off the SWIFT financial system, which is significant. And from what I'm reading, that is considered inflationary as well. So we could be back on our heels pretty quickly here. And if we open today below 339.98, you should allow for 331.63 intraday, a significant test, long-term capitulation point into Q2. We are above it, so odds still favor higher trade as we move through Q2. Please consider subscribing to the Wicked Stocks wickedstocks.com premium membership. Continue watching the Daily Triple Q on a daily basis. If you like watching it, you can combine the Triple Q and the SPY together for $40 a month. I have half off your first month. Just type in half off on that coupon code. It'll be $20 for both for the month. I know it's a little money, but it's not really all that significant, I think, in the overall scheme of things, if it keeps you on the right side of the market and certainly supports your trading and enhancing the bottom line on your personal portfolio. And that is really the important thing here. So hope to see you come on board. That's all I've got. I will be back tomorrow for another edition, the Tuesday edition of the Daily Triple Q Report, but it will be in the subscribership of the premium membership on wickedstocks.com. So I hope to see you there. You have a great day.
Hi, I'm Kerry Artek, Chief Analyst for Wicked Stocks. So you've probably heard by now that we're going to a paid format for our regular series of daily and weekly YouTube videos, including the Daily SPY Report, the Daily Triple Q Report, the weekly DIA, IWM, and Bitcoin report. And so whether you've been watching our videos for the last few days or the last few months, you know that our work is unique and that does provide a distinct sense of market flow and timing. Whether you're a day trader or a longer-term position trader or an investor, you know that we cover all the time frames in all the videos that we do. I've been a market analyst for over 30 years, and I started my own commodity trading advisory off the Chicago Board of Trade in 1996, and I've catered to floor traders, day traders, institutional trading firms like hedge funds and brokerage firms, and large-scale commodity producers throughout the United States. I'm skilled in the art and science of technical analysis, and I know that you're continuing to follow my work on wickedstocks.com will assist you in staying on the right side of the market. We're offering half off your first month. Just go to wickedstocks.com, click on the premium membership link. It'll take you to a landing page that'll have a coupon link. Fill out the word half off, and we'll provide you 50% off your first month subscription. That's $12.50. That's the cost of a movie or a McDonald's meal. And I have to ask you, is that worth the cost in significantly enhancing your personal portfolio's profitability? You can cancel your subscription at any time, but I'm confident that over time, as our work continues to assist you in sharpening your sense of directional market flow and timing, you'll stick around for the long haul. Go to wickedstocks.com and fill out that premium membership form. You won't regret it.